However, on the corn market, a little bit of firmness, but soybeans taking the other side of that ledger in about an equal amount here. That's all ahead of this China Phase 1 trade deal. It's supposed to be signed here later this week. The trade acts like it's a non-believer that they're really going to buy that much.
Yeah, it's still up in the air, and I think the market has set itself up for a little bit of a scenario where we get an overpromise, underdeliver. And we saw the rally in soybeans through the month of December, about 75 cents. So I think a lot of that optimism is priced in, and now you're running into headwinds against psychologically significant resistance at 950 for that March contract. 933 to 937 is a big pocket for us here on a closing basis. This was resistance in the middle of December, has been support since then. If we break and close below there on the lackluster signing, potentially we see a run down to the 920s, which represents a key Fibonacci retracement in the 200-day moving average. I think there's pretty good value down in the 920s right here, right now, though, in the mid 940s. I don't see a whole lot of value. Corn on the other side of things, I'm pretty optimistic about. We got that USDA report on Friday, and it wasn't bearish. So really no bearish news is actually good news, and you're starting to see some of these funds cover that short position. 390 to 392 is a big pocket to keep an eye on here throughout this week's trade.
So talk to me about the commodity fund positioning. I see where they're heavily net short on the corn. That could be supportive here, but they're kind of neutral on the soybeans and long, about 20-some thousand contracts in the wheat.
Yeah, they have obviously kind of squared up their positions in anticipation of this Phase 1 deal. Pretty much flat on corn. They're looking at about a net short position near 80,000 contracts, and that's one of the reasons why we like corn here. If we get technical closes out above resistance, I think that spurs additional short covering. The funds, I think, going into Friday's report was hoping that there would be a little bit more fuel to their fire on the bearish narrative, and they weren't able to get that. So you're starting to see some of the funds cover those positions, adding a little bit of positive momentum here in price action. Hopefully get that technical close and spur additional short covering. Again, 390, 392, extremely important here this week. If we achieve consecutive closes out above there, I think there's room for this market to run back above $4.